Most people think taxes are complicated because everyone talks about them like they're some kind of secret code only accountants can read. But what if the problem isn't the taxes themselves, but the way they're explained? What if the entire system could be understood with just a few simple ideas, explained in plain English without numbers flying everywhere? In this video, we're going to break down taxes the way they should have always been explained, step by step like a story. No jargon, no stress, no assumptions. Just clear logic that anyone can follow. And by the end, you'll see taxes not as a maze, but as a predictable machine where every part has a reason for existing. So let's take something that feels overwhelming and make it feel obvious. Let's be honest, taxes feel confusing for most people. They sound like a maze of rules forms and numbers that only accountants understand. But here's the thing nobody tells you. If you understand just three concepts, brackets, deductions, and credits, you already understand the core of how the system works. Everything else is details layered on top. You've probably heard people say things like, I made more money and got pushed into a higher tax bracket. Now I'll take home less than before. Or deductions save you so much money. Or tax credits are basically free cash. But what do these things actually mean? Why do two people with the same salary sometimes pay very different amounts of tax? And why does the system look complicated on the outside, but behave very predictably once you know the structure behind it? Today, we'll break it all down in plain English without any jargon. We're going to treat taxes like a machine. You feed your income into it, a few mechanisms operate inside and out, comes your final tax bill. And by the end of this explanation, you'll see that the machine isn't as mysterious as it seems. Let's begin with the simplest question possible. What is a tax? A tax is basically a contribution you make to society. It's the part of your income that funds roads, schools, emergency services, hospitals, national defense, public parks, and thousands of things that work quietly in the background to keep a country functioning. Without taxes, those systems simply wouldn't exist. But even though everyone contributes, not everyone contributes the same percentage. That's where the first key concept appears, tax brackets. Most people misunderstand tax brackets. They hear that they've moved into a higher bracket and panic thinking the government will now take a huge percentage of their entire income. But that's not how brackets work at all. A tax bracket is simply a band of income that gets taxed at a certain rate. Think of it like pouring water into a series of cups stacked vertically. The first cup fills up. Once it's full, any extra water spills into the second cup. And once that fills, the overflow goes into the third, and so on. Each cup represents a bracket, and each bracket has its own tax rate. The key point, and the thing many people misunderstand, is that only the income inside a specific bracket gets taxed at that bracket's rate. It's not all or nothing. So even if you pour enough water to reach the third cup, the amount in the first cup is still taxed at the lowest rate. The amount in the second cup is taxed at the middle rate. Only the overflow in the third cup is taxed at the highest rate. This means you never lose money by entering a higher bracket. At worst, only the extra amount above the threshold gets taxed at the higher percentage. The rest stays where it was. Once people realize this, the fear of brackets usually disappears. The system isn't trying to punish you for earning more. It's just applying different rates to different layers of your income. But before your income even reaches the brackets, something else happens first, deductions. Deductions reduce the amount of income that gets sent into the bracket machine. If tax brackets are like the cups waiting to be filled, deductions are like scooping out some water before you pour it in. They shrink the part of your income that gets taxed. There are two main types of deductions, the standard deduction and itemized deductions. The standard deduction is like a built-in discount everyone gets. It's a fixed amount set by the government. You don't need to qualify for it. You don't need to list receipts. You just claim it automatically. It's designed to keep the system simple and fair for people who don't have a lot of special expenses. Itemized deductions, on the other hand, allow you to list specific expenses that qualify for tax reduction. Things like large medical bills, mortgage interest, charitable donations, or state and local taxes. The rule is simple. You choose whichever is bigger, your standard deduction or your total itemized deductions. Most people take the standard one because it's easy and often larger. A common misconception is that deductions reduce your tax bill directly. They don't. They reduce your taxable income. The tax you pay comes later after brackets are applied. So if you have a $1,000 deduction, you save the tax rate applied to that amount, not the entire $1,000 in cash. Deductions help, but they don't pound your tax bill down with a hammer. They shave it down gently. Credits, on the other hand, act like a hammer. A very friendly hammer. If deductions reduce your taxable income, credits reduce your tax bill directly. If your tax bill is $500 and you have a $300 credit, your final bill becomes $200. Credits are powerful because they're applied after the whole bracket system finishes its calculation. Some credits are non-refundable, meaning they can reduce your tax bill to zero, but not below zero. Others are refundable, which means if the credit is larger than your tax bill, the government will pay you the difference. Refundable credits are one of the only times the tax system can send money back to you, even if you technically owe nothing. Now, to make all of this feel real instead of abstract, let's walk through a full example step by step. Imagine you earn $50,000 in a year. That's your total income. But before the brackets get involved, you claim the standard deduction. For illustration, let's assume the standard deduction is around $13,000. Subtract that from your income, and suddenly your taxable income drops to $37,000. That's the number the bracket system will actually work with. Now picture a simple bracket structure. On the first slice of your income, the tax rate is low. The next slice has a higher rate. Then a higher one after that. Your $37,000 gets divided across these slices automatically. Maybe the first $10,000 is taxed at the lowest rate. The next 20 or so thousand is taxed at the next rate, and the remaining few thousand at the next one. When you add up the tax from each slice, you get your preliminary tax bill. But you're not done yet. Maybe you qualify for a tax credit, let's say a $1,000 credit. That credit gets subtracted directly from your tax bill. So if your bill was $5,000, it becomes $4,000. If the credit were refundable and larger than your bill, you might even get money back. That's the entire flow of the tax machine. Income goes in, deductions reduce it, brackets split it, credits lower the final result. Once you understand this mechanic, all the scary tax terminology turns into simple ideas. But people still get confused because there are so many forms, rules, and acronyms. So let's address a few of the most common misunderstandings. Misunderstanding number 1. Entering a higher bracket makes you lose money. The truth is the opposite. You always keep more money when you earn more. Only the extra portion in the higher bracket gets taxed at the higher rate. The rest remains at the original rates. The only thing that changes is the tax you pay on the next dollar, not the tax on your entire income. Misunderstanding number 2. Deductions and credits are basically the same. They're not. Deductions reduce your taxable income. Credits reduce your tax bill directly. Credits almost always have a bigger impact dollar for dollar. Misunderstanding number 3. It's always better to itemize deductions. Not necessarily. You only itemize if your itemized list is larger than the standard deduction. Otherwise, the system wants you to take the simpler option. Now you might wonder, why is the government so obsessed with defining tax brackets, deductions, and credits? Why not make a flat tax where everyone pays the same percentage? It would be simpler, right? But simplicity isn't everything. The current system is based on the idea that different people have different needs. Some people earn very little, and if they paid the same percentage as everyone else, it would be financially crushing. Others earn enough that a higher rate doesn't fundamentally change their ability to live comfortably. So we get a graduated system. It tries to be fair by adjusting the burden based on income levels. Deductions exist because the government wants to recognize that certain personal burdens like medical bills or home mortgage interest affect people's ability to pay taxes. Credits exist to reward or encourage certain behaviors, like raising children, attending school, installing clean energy systems, or being in a low-income household. These tools serve purposes beyond simply collecting money. But even though the reasons behind the system are complex, the mechanics are simple once you break them down into the 3 ideas we've covered. To help everything settle in, let's go through a second example this time, comparing 2 people. Person A earns $50,000 a year. Person B earns $50,000 as well, same income. But Person A takes the standard deduction. Person B has large medical bills qualifying them to itemized deductions for a total of $18,000. That means Person B's taxable income is lower. So even though they earn the same amount, Person B ends up paying less tax. Not because they cheated the system, but because deductions exist to reflect real-world circumstances. Now let's modify the example again. Imagine they both have the same deductions, but one of them has a child and qualifies for a tax credit while the other does not. They might start with the same taxable income, go through the same brackets, but at the end, their credits differ. The parent ends up with a smaller final bill. That's the power of credits. They kick in after everything else. All of this shows why people with similar salaries sometimes pay very different tax amounts. The system isn't only about income, it's about deductions and credits stacked on top of the bracket structure. That's why understanding these 3 ideas is far more important than memorizing numbers. Let's add one more layer, why the system feels complicated. Most people interact with taxes only once a year, and when they do, they don't see the smooth mechanism. They see forms, boxes, and instructions that look intimidating. But behind every form, the same simple process is happening. Start with income, subtract deductions, apply, brackets, subtract credits. That's it. The forms are just the interface. And once you know the structure behind the interface, the fear usually disappears. So now let's recap everything cleanly and simply. Tax brackets divide your income into layers and tax each layer at a different rate. They don't punish you for earning more. They simply tax portions separately. Deductions reduce how much of your income enters those brackets. They lower your taxable income, not your final bill directly. Credits lower your tax bill dollar for dollar. They come at the end of the process and sometimes can even generate a refund. When you put all 3 together, the tax system becomes much less mysterious. You know how income flows through the machine. You know where it gets adjusted. And you know which levers have the biggest impact. Understanding taxes doesn't require a finance degree, and it doesn't require understanding every rule. It only requires knowing how the machine works. And now you do. If you want more videos breaking down complicated topics into simple stories like this, let me know what you want explained next, whether it's mortgages, credit scores, inflation investing, or anything else that feels confusing. Everything has a structure behind it, and once you understand that structure, the world becomes a lot easier to navigate. Thank you for watching, and I'll see you in the next explanation. If you've made it this far, you now understand more about taxes than most people ever will. Once you see how brackets, deductions, and credits fit together, the entire system becomes less like a puzzle and more like a simple flow of ideas. You don't need to memorize rules or chase forms. You just need to remember how the machine works. If you want more explanations like this about money work systems or anything that feels unnecessarily confusing, let me know what you'd like to explore next. The world is full of complicated topics that only stay complicated until someone explains them clearly. Thanks for watching, and I'll see you in the next one.